Hi, I'm Billy Gwaltney, and this is the CYA Podcast. This show is for the physician who understands the importance of protecting everything you've worked so hard to achieve. Each week, I'll bring you tips and advice to help you cut through the clutter and misinformation and show you exactly what you need to preserve your income and way of life. If you're ready to achieve the peace of mind that only financial security can bring, let's get started. Welcome to today's episode of the Cover Your Assets podcast. This is Billy Gwaltney, and I'm very happy to be with you today. Today we're going to talk about another one of the top tier disability contracts for physicians. It's with a company called Ameritas Insurance Company, Ameritas. Emeritus is a mutual insurance company, which means the policyholders own the company. That's a good thing. It was established in 1887, so they've been around a while. As far as the key elements of coverage to get to that you'll want to be sure your specialty disability policy has, the first one is the obvious one for a lot of folks, I guess, is the definition of disability. They do have what's called a true specialty on occupation definition of disability, which means two things. One, you're considered to be disabled if you cannot perform the material duties of your occupation or specialty or subspecialty. And two, there's no penalty for income you later earn doing a different job. Okay, so if you're a surgeon, become disabled, you could then read charts or do telemedicine or consult, write a book, whatever you want to do, make an unlimited income doing that, and there's no penalty to your disability benefit. That's a non-negotiable to have with quality disability coverage for physicians, and it's there. And it's true whether you're a surgeon or not. I just used a surgeon as an example. The Emeritus contract also includes a future insurability option, which allows you to increase coverage. If this option's on your policy, you can increase coverage over the course of time as your income increases up to a cap of $20,000 per month. What's important is that any discount you obtain when you originally purchased the policy is automatically included on the increase amounts as well. And also no additional medical underwriting is required at the time of the increase. And so those are important features. When you go to increase, a lot of residents or fellows will start out at, say, $5,000 a month. And this option can allow them to ultimately increase up to $20,000 per month, depending on their income over their careers in attending. And when they do that, they access the trainee discount, and they also don't have to update the medical review. Important features. The Emeritus contract also includes a residual benefit and a recovery benefit. This is combined in something called an enhanced residual benefit. What the residual benefit does is it pays benefits if you're partially disabled and suffer at least a 15% or greater loss of income. Whatever that percentage loss of income is, the policy will pay that percentage of your benefit. So it's not all or nothing. You don't have to be totally disabled to collect, and that's important. Also, a recovery benefit is vital. It pays if you medically recover from a disability and return to work. But when you return to work, your income does not recover to what it used to be before you were disabled, and that happens a lot. It's an important feature to have as productivity governs what physicians ultimately earn. It's very possible to come back from a disability and be medically cleared, but just never reach the same level of productivity. And so having the recovery benefit is important. Again, both the residual benefit and recovery benefit are combined in what's called an enhanced residual benefit rider. As far as the psychiatric benefit, the Emeritus contract offers either a 2-year psychiatric benefit or a 5-year psychiatric benefit, depending on your specialty. So the maximum they would offer would be 5 years. The minimum would be 2 years, again, assuming medical underwriting qualification. And that's 2 or 5 years cumulative over the life of the policy. So you'll want to check for your specific situation as far as which one of those are available to you. There's a presumptive benefit on the Emeritus contract that's important to have. The presumptive benefit pays if certain events happen and you continue to work in your specialty or in a job, and they will presume, Emeritus will presume that you're totally disabled and pay your full benefit. And those events are the complete loss of hearing in both ears, sight in both eyes, speech, or the use of any 2 limbs. And it does not have to be permanent or irrecoverable. And The Emeritus contract is a bit unique in that if you qualify or trigger the presumptive benefit clause, then they will waive the elimination period. So the elimination period, you either have typically like a 90-day or 180-day elimination period, which is the amount of time you wait between the time of the disability and the first benefit check arriving. If you're disabled January 1st, you get a check in April if you have a 90-day elimination, or a check in July if you have a 180-day elimination. If you activate the presumptive benefit in your Emeritus policy, then they would waive that elimination period and pay you right away. The Emeritus contract also includes COLA rider, or cost of living adjustment rider. It's an extra fee for this. It's not required. This would increase your benefits while you're on claim to offset inflation. And so if you have that on your policy, it's going to pay whatever the policy benefit is, it's going to pay that at the time of claim for the first 12 months. Then in the 13th month, it's going to bump it up by 3%, which is what most of our clients opt for. It's a 3% fixed increase. It's a simple interest, so it's going to be the same 3% each year. They offer a 0 to 6% compounded that floats based on the consumer price index as well. The COLA rider is not required. It's generally desirable for situations where there's a potential for a disability lasting, say a decade or longer. But again, it's not required. It's an optional feature. The Emeritus contract has a couple of neat perks that a lot of our clients like that I want to mention here briefly. The first one is a non-disabling injury benefit. Emeritus will pay benefits for medical treatment you receive for minor injuries, what they consider to be non-disabling injuries. And the way they calculate how much they'll pay is 50% of your base policy benefit, or your total policy benefit, up to a cap of $3,000 per month. So if you had $5,000 a month of coverage, they would pay up to $2,500. Once you have $6,000 or more, they'll pay up to $3,000 per occurrence towards any medical treatment for injuries, minor injuries. It doesn't have to be work-related. It doesn't have to be something where you miss work. It can be, we've had clients, they sprain their ankle really bad, or they hurt themselves on a bike accident. So if you hurt yourself working out, hiking, doing yard work, whatever, if you get that medically treated, they're going to pay you the cost of that treatment. Okay. And what's interesting is they pay it regardless of health insurance. So even if your health insurance reimburses all of it, or the vast majority of it, they'll still pay you the total cost of that up to that cap of $3,000 per occurrence. There's not an extra fee for that. There's no limit to the number of occurrences. We've had clients collect multiple times from that. It doesn't raise your rate. They can't exclude the item that you collected on. There's really no downside to it. It's not available in every single state. I think it's available in like 46 out of 50 or something like that, but there are a handful of states where it's not available. The same is true with what's called a good health benefit. That is a perk that Emeritus offers, again, in the states where it's approved, where every year somebody has a policy with Emeritus and does not file a disability claim, which is how they define good health, the elimination period will drop by 2 days. So if you have a 90-day elimination period on your policy, in 15 years, it would automatically be 60 days instead of 90. And so that's an extra benefit check. That's significant, and you don't pay an extra fee for that. And again, they provide that automatically, again, in the states where it's approved, which is the vast majority. There are a couple of ancillary features that Emeritus offers. They offer a student loan repayment rider. You have to pay extra for that. It would pay up to $2,500 to your student loan provider if you're disabled. It's not available in every single state. It's available in the vast majority, but there are a few exceptions. And there's a catastrophic rider that would pay an extra benefit if you're catastrophically disabled and unable to perform 2 or more activities of daily living. Lastly, when it comes to the Emeritus contract, they have 2 premium options. They have a non-cancelable and guaranteed renewable premium that is a fixed rate, and that rate can never increase unless you increase coverage. They also offer a guaranteed renewable only premium. And what that is an additional 16 or 17% discount that they offer in exchange for them having the contractual right to increase the rate by occupation class in the future. And so if you're a physician and you're in an occupation class with a group of other physicians, and if they have bad claims experience in the state that you purchased that policy in, they can petition the state insurance department to raise the rate for all policyholders in that occupation class in that state. They've never had a rate increase in the 50 plus years they've been in this marketplace, but they could potentially do that in the future. It's a slightly higher risk category. A lot of our clients like that option because that savings will add up over time. But if that spooks you, then you would want to stick with the non-cancelable and guaranteed renewable option where they can't do that. I hope you found this helpful. Emeritus is an excellent contract. They're a very good company to work with, and so they're definitely worthy of being considered and are certainly in the top tier of disability contracts, and there are only a few of them. This is not meant to be a comprehensive or exhaustive contract analysis, of course, but it should give you a good idea as to how they may be a fit for your situation. Please feel free to text me anytime to arrange a conversation or with questions. My cell is 704-270-2376. Again, that's 704-270-2376. I'd be happy to talk with you if helpful. Until next time, this is Billy Gwaltney. Thank you for carving out the time.
This is thepodcastfactory.com.